Good morning, folks, and welcome to Stock Charts Today. I'm going to begin this morning off. It is the 14th of March. I'm going to begin it off with a request, and that is if you can leave a comment in the comments section if you watch us on YouTube with regard to what you would like to see out of these videos. I would really appreciate that. I'd like to get more direction from the viewers as to what I should focus in on. I really thrive on feedback. Whether it be negative or positive, that's fine as long as it's professional. If you are a member, just go into the forum. You can leave a comment under the feedback section or send me a private IM. And if you're not a member and you watch this on the website and you got to the website either through StockTwits or Twitter, send me an instant message or post a message. Either way, it's fine. Just leave me some feedback, because while I love doing commentary with regard to the market, I want to make sure that I'm providing as much value as possible for the viewer. So again, please leave some comments, and I would love to entertain any feedback and incorporate it. All right, let's get to the morning's events. At current, it is 4:16 in the AM Eastern Standard Time. And I'd like to begin with the S&P 500. Let's talk about the pre-market activity over the past few days. Here is Monday morning. Remember, I mentioned that the futures on Monday morning were very strong. Expect a pause and or a pullback, and we got that pullback. Fast forward to yesterday around this time, and we were rallying. Now, we received news yesterday that inflation wasn't as great as one might expect, and it certainly wasn't as hot as it was the prior period, which came in at 0.5% for January. Yesterday, we came in at 0.2%, and that emboldened bulls to take the markets up in the morning. However, we faded. Now, members, if you're watching this video and you haven't taken a look at yesterday's market wrap, please go to it. I talk a lot about how we plan on trading this market today. So please don't skip over last night's market wrap. Go check it out, because what we're seeing set up here this morning is a day very similar to yesterday, where we have the futures rallying. There's only one major difference. Yesterday, we were at the highs of the month and at the highs of the lows since February, and now we have reversed to begin to break down. So we have a potential double top on a 4-hour chart, and we have a definite breakdown to new lower lows. So while we do not have a trend setting up yet, the elements for a downtrend are certainly in place, and one should think about at which point you want to stop out of your position, raise capital, and live to play another day. Now, we have economic data that's coming out this morning, which can move the markets. We have retail sales and the PPI, the Producer Price Index. So a word of caution today, folks. Watch out for the potential. I'm saying only a potential for a fade. When markets should go up, yet they don't, and they sell off, that is a tell, in air quotes. So in closing on the S&P 500, the futures are strong this morning, but they're suspect. Let's talk a bit about Bitcoin. Bitcoin broke out here on the 12th. It has since broken back down into a trading range. It's consolidated sideways, and it has yet again broken out as of last evening. It is pulling back. And overnight, I was checking zerohedge.com, and there's a headline there that says that Google will no longer carry ads for cryptocurrencies. Now, while I'm not a huge fan of cryptocurrencies, because basically I don't understand them yet, I don't know who's going to be the winner. Therefore, I'm watching for the most part. I think that there's a lot of scammers out there, but I am extremely reluctant to say to anyone that you do not have the right to advertise, you do not have the right to publish your thoughts and opinions. And I'll be honest with you, I think that Google's decision has more to say about Google than it does about Bitcoin or the cryptocurrency arena, because it's a part of a trend. It's a part of a trend with Facebook, Twitter, and Google, in that there's what seems to be an attempt to monitor free speech, and it's rather concerning and definitely chilling. So keep an eye on this trend, and as this develops, I'm going to watch the charts of these major names, because I think that longer term, they're inviting regulation of their own businesses. I'm getting off track here a little bit, but Bitcoin, for the negative news overnight, it's holding up fairly well. Now, the resistance level to watch is obviously 10,000. It's a psychological resistance level. Now, would I wait until we closed above 10,000 to buy Bitcoin were I so inclined? No, not necessarily. I think that we have a good enough support level here at 87, what's the low here? 87.35, where what we could do is you could open up a small position. I like to call it scratching the itch, and use a stop loss right below 87.35, and then add more as Bitcoin validates its ability to break out above resistance. Add more above $10,000 per share. But if you get a breakdown below this support level here, and for that matter below 9,000, I would avoid like the plague. The Nasdaq 100, this is a concern. This is a huge concern, what I'm looking at right now on this 4-hour chart. You can see that we faded yesterday. However, we broke down below the lower band of support, which formed the initial data point low on the 1st of March. And we have broken down and closed below this lower band of support. Now, this is what I always teach members, is that when you get a breakdown below a lower band of support, it doesn't necessarily mean there's going to be a flush down. What normally happens is that you get a rebound and an attempt to recapture prior support, because traders are in denial. They're either A, oblivious to the fact that we've broken down below key support and there's been technical damage done, or B, they've deluded themselves into thinking that, you know what, it's different this time and we're going to go straight back up. And believe me, I don't know at all. It could go straight back up today and make new all-time highs for all I know. However, in the shorter term, this is not a good setup here, because we have broken down. These are facts, right? We want to deal in facts. And what are our probabilities once we have the facts as a known? The fact is that we broke down below the lower band of support. Fact. We have rebounded, and we are attempting to recapture a support level. The probability of us recapturing that support level is about 50-50 right now. Were the Nasdaq not at all-time highs right now, the odds of a breakdown, back to the 4-hour chart, the odds of a breakdown would be much higher than what they are right now. And just to clarify, when I say a breakdown on a 4-hour chart, it doesn't mean that the Nasdaq longer term is going to crash. It just simply means that you'll get a better risk-reward entry point at lower levels, not that we're going to see a collapse in the Nasdaq. I wouldn't make that decision based upon a 4-hour chart. So the Nasdaq rebounding this morning, but there's a caution flag which is on the track. So just be careful. As I always coach members, don't go running in this morning and buying any of the major averages on the hype, the euphoria that's going to be spit out by the financial news media if we get economic data that on the headline looks bullish, when in reality, traders view it as potentially bearish. We went over this last night on Market Wrap. Members, please, if you haven't checked out last night's commentary, please go check out Market Wrap. It's posted in the members area. And if you have any questions, post them in the forum, because if I didn't clarify a position properly, more than likely other members have a similar question and they'll benefit from your question and my response. And thank you in advance. Let's talk about member stock chart request. I received a request from a long-term member last night, Jerry, and he asked for a higher level view of gold. And I'm going to use the Thinkorswim chart here because I've already prepared for this. Let's pull back to a weekly chart. Let's talk about gold and the miners, and that's what he wants to know about. All right, so gold. The story with the gold and the miners is a story of two completely different charts, where the gold miners have really pulled back dramatically. Let's throw up here the gold miners. We'll use the GDX. You could see a major pullback from the August 16 highs. We have been putting in a series of lower highs and lower lows, whereas with gold has been holding in rather well. It's been very resilient. So here we have our upper band of resistance in yellow, our lower band support in yellow as well. And you can see that we are in an ever-tightening consolidation and considerably closer to the upper band of resistance versus the lower band of support. Juxtapose that versus the GDX, which is literally trading down below the lower band of support. We broke down on the GDX. We broke down the week of February the 26th, and we are attempting to recapture what was support is now resistance on the GDX. So this could be the beginning of perhaps a serious technical breakdown on the gold mining names. Now, we have in a position in the gold miners, and you may be saying, why are you still long and bullish of the gold mining names? It has nothing to do with the gold mining names per se. What it has to do with more so is the macroeconomics. I'll spare you that right now. We'll boil it down to the trade deficits and the fact that we believe that the Federal Reserve is way behind the curve. Even if they did 4 rate hikes in 2018, they're still way behind the curve on inflation. And you may be saying, Bob, the inflation data yesterday released by the government, the CPI, was on par with expectations. So what gives? Well, this is not the same CPI that was around during the hyperinflation days under Jimmy Carter. The government has conveniently modified it so they do not have to pay out cost of living increases on Social Security. Why don't they want to pay out those cost of living increases? Like anything else, the little guy gets screwed because the government, for all intents and purposes, is bankrupt. And there may be some out there that are new to my commentary, maybe saying, you know what, you're off the wall, man. There's no way that the United States of America is bankrupt. That's insane. That is horrible to say. Well, picture your household. If your liabilities outweigh your assets and your cash flow is smaller than your outgoing liabilities, and you cannot service your liabilities without putting your new liabilities on a credit card, you're insolvent. Now think about how we run our government. There is no difference. There is a difference. The only difference is that we have the ability to keep this charade going on for an indefinite period of time, until such time as buyers stop entertaining bidding on our treasury bond auctions. And when that day comes, things are going to get real fair real quick, because we have been living beyond our means in this country for a long, long time. So this is the weekly chart. I think that gold is holding in well. I think that the gold miners can bounce back. When won't the gold miners bounce back? If we break down below the lows of the week of the 15th of February. We break down and close below that level, it's all over. We're going a lot lower. If we rally up and through this blue line here, which I call the secondary resistance level, the yellow upper band being the primary resistance level, if we break above this upper band of resistance, you're going to see a short squeeze. And we're going to head up to the upper band of resistance at $24 per share at current in a heartbeat. Now, with gold, I think that the challenge is going to be psychological in nature. Everyone knows that the price of gold and silver are manipulated through the futures market. So while we may get a breakout above this upper band of resistance here, we've been there before. We were there here in January. We were there again in February, but we couldn't close there. We needed a decisive close above 1360 on gold. And I would argue that for us to get a longer term breakout and change in psychology, a rally up and through 1400, that, my friends, will have traders taking notice of the new bull run in gold. Now, drilling down to a daily chart, we are in a very tight consolidation. I would argue that we are going to see either a breakout or a breakdown on the gold names within the next couple of days. And I think that the catalyst is going to be twofold. One, the inflation data released this week. Two, the Federal Reserve statement released next week. If we get inflation data that meets expectations or comes in lower than expected, you should see a rally in gold. And you may be saying, you're nuts. Gold does better in an inflationary environment. Well, what you need to buy into to embrace that argument is that there's no inflation. I don't believe the government numbers. I don't think anybody believes the government numbers. Sit down, calculate your bills. You don't have the luxury of excluding food and energy, but that's the reality. Those prices are going up. Rent is going up. The cost of living is going up. While the dollar, which you cannot avoid as a conversation piece when discussing gold and the miners, weekly chart is in a major downtrend. It's in a bear market. It cannot be argued. Now, we have had a counter trend rally within a secular bear market on the US dollar. Since mid-January, we have seen a resilient US dollar. But let me tell you, folks, traders who are long of the US dollar know exactly what is coming if we break down below 88.253 and close there on a weekly basis. It would be a major technical breakdown, and a breakdown below the January lows would send gold, the gold miners, silver, the precious metal names, most of the commodity complex ripping through the ceiling. Have no doubt about it. Now, there's a flip side. I mentioned the gold miners that they are breaking down. We're not going to ignore that. They're holding support, but technically they have broken down below a key support level. If we break out above this secondary downtrend line in blue, the probability of us rallying up to the primary downtrend line in red is very high. If we break out and close above this upper band of resistance, which at current sits at 94 on the Dixie, you are going to see Armageddon in the commodity complex, in particular gold and silver. Have no doubt about it. I will not be long of commodities on a rally and a close above 94. We'll probably be out way before we ever see that level. Getting back to gold, sorry, Jerry, I'm going off on a tangent here, but we need to take a look at the dollar. You know that when we talk about gold. Now, gold on a weekly basis is up this week. Here's our resistance level. We need to see a close above 1330 on a weekly basis before shorts begin to cover. Daily chart, not much to talk about here. Very similar to the weekly chart. And when you get similarities between the weekly chart and the daily chart, you know that you're coming close to either a breakout or a breakdown. The consolidation is that tight. Take a look. Daily chart here. It's like you're at the optometrist. Weekly chart here, right? They're very close. Which is better? 4-hour chart. Now, on a 4-hour basis, very short term, I acknowledge that. We broke out overnight. We have since given back the gains. We haven't closed out this 4-hour period. We can bounce back. But you could see we have resistance above. 1330 is the line in the sand. I would argue even 1331, even better. Jerry, I hope that answers your question with regard to gold, the miners, and the dollar in one shot. Let's get to the other member stock chart requests. Johnson & Johnson. What was a good story several weeks ago when I began talking about it here has now become an absolute nightmare. We broke down below critical support at 137.50. We have since rallied back. We may even rally up to 137.50 until we get a close above that level. I would avoid these shares like the plague. We have broken down below the lower band of the rising uptrend channel. This bull market is in serious jeopardy of failing and rolling over into a bear market. We're not there yet because we haven't rallied back to put in a lower high. But if we put in a lower high and break down below 127.50 and close there, you have a new bear market on your hands. Now keep in mind also that you have the potential for a head and shoulders set up here. Left shoulder, head, right shoulder. Here's your neckline at 127.50. That is a critical support level. Daily chart. So on a daily basis, we managed to close yesterday above the 200-day moving average for the first time since January, which is good stuff. The problem is here is that you see this wick, this tail, this shadow, whatever you want to call it on this candlestick. Call it cupcakes. It doesn't matter to me. Too many people get wrapped up in the terminology. Most of you are males out there. I know my demographics. We are visual in nature. All you need to do is when you see this wick on top of this candlestick, the body of the candlestick, all you need to do is picture the word sellers above. So what we want to do is take our crayon out, draw a line, and then look back. Oh, look at this. Conveniently, where we found resistance yesterday, it was support several months ago. It was also resistance back in October. So this is a very, very important resistance level. Now, if we manage to close above this resistance level here at, let's call it 135, and above the 50-day moving average, which would be ideal, I would put the trade on with a stop loss right below 134.90. That would be a good risk-reward entry play because what had happened? The shares had shown you the ability to recapture support. That means you have enough demand to overwhelm sellers from back here. And you could put your stop right below because if it fails to hold it, you don't want to be long of it. And you keep your loss small with the potential for big gains. Volume yesterday was very good, but remember, there was a lot of selling as well. C-Trip, weekly chart. We were in a short-term downtrend. That has since resolved itself. We have broken out of this triangle formation. We have a new weekly high. We are off the highs of the week. Volume last week was low. We have both lines on Stokes above the 50 or neutral level. Good stuff. RSI has broken out and validated the breakout on price. Daily chart. So here's our trading channel, which formed back in November. And we have broken out. We broke out last Friday here. We are in day 3, actually going into day 4 of holding support. I think that the shares can be bought. You want to scratch the itch, go for it. But use a stop right below Friday's lows. If we close back down into this trading range, I would avoid the shares. I would just stop out, keep your buys small, your initial buys small, and then add on strength. Keep in mind you have a lot of resistance back here. So where I would add more is on a close above 51.33, then above 54.25. Volume yesterday to the downside was low. So what I would do here, given yesterday's price action, I would wait until as late in the day as possible, see whether or not we close above this support level. If we don't, no harm, no foul. You don't have a position. If we close above it, well, the probability then of us rallying just rose. The more time we spend above this breakout point, this support level, the greater the probability of us moving higher. UGAZ, weekly chart. We are in a long-term downtrend. That has not changed. We have had vicious counter-trend rallies, but the resumption to the downside has been the norm. I don't see any reason why that should change now. The only reason why we are rallying is because of the cold weather. Now, these candlesticks here appear to me to be more consistent with shorts covering rather than healthy buying. And you may be saying, Bob, you're ignoring the volume bars here. They're above average, but take note of the candlesticks. We've been gapping higher week over week since February, but we're closing off the highs of the week, which implies that you have a lot of churning going on here, which is skewing the volume bars some. So when do I get bullish on UGAZ? On a close above this upper band of resistance. If we get a close on a weekly basis, and especially a monthly basis, because this is a long-term downtrend, this is where I really defer to my monthly charts, because there's a lot less noise. Let's drill down here a little bit. Throw some lines up, see where we're at on a monthly basis. See how much cleaner the chart is? You eliminate the noise of the weekly chart, and certainly the daily chart. All right, so this is an interesting setup here. We have, with a few exceptions, put in new monthly lows consistently over the past year. There have been exceptions, but it's been the norm rather than the exception not to. This month, we have an inside week. No new monthly low, which is really good stuff. And many times, if you open down into the wick, the bottoming tail of a candlestick of a prior period, whether it be a monthly chart, I don't care if it's a 1 minute chart, the probability of you breaking down further is very good. If you gap up to within the body of that previous period's candlestick, the probability of you trading sideways is good. It doesn't mean that you're going to rally, but you're certainly more prone to rally rather than break down. So far this month, we're trading within the body of the prior period, which is good stuff. Now, would I go buying based upon that observation? No way. What I would do is wait for a breakout above this upper band of resistance, because unlike a daily chart and even a weekly chart, a close above the upper band of resistance, which this symbol has been unable to do for many, many months, would be significant. We're not there yet. I would wait for a close above the upper band of resistance at, let's call it, $76 per share. And for you folks that are the type that believe that you buy low and sell high, that's nice, but it's not really the reality, right? Because if you bought low, what you thought was low, over the past year here, you got sucker punched the following month. What you want to do is, when you have a stock that's in a downtrend and is not at extreme oversold levels. What do I mean by that? Extreme oversold meaning extreme oversold on an RSI, with RSI below 20. That would make it interesting. We're not there. Nowhere near it. So what we want to do is we want to wait for strength. We want to see institutional demand. I may be a contrarian, but I certainly respect the power of institutional money flows. If we ignore that, we do so at our own peril. So wait for the breakout here, buy on strength, and buy on a closing basis above resistance. Not until then. Until then, the path of least resistance remains down for UGAZ. Now, on a daily chart, I know what many of you are thinking when you're looking at this chart. You're looking for a short-term swing trade, not a long-term investment. We don't have this set up here. This is pathetic, this rally higher. Now, could we be setting up a W formation? Sure. But these candlesticks, the lack of conviction is not awe-inspiring. I want to see candlesticks like this. Even if you get a pullback, you get a follow-through day to the upside, that's bullish stuff. These are the candlesticks I want to see, not these where it's you can't close at the highs of the day. You close up one day. You have a bearish key reversal the next. This is ticky-tack trade. There's no conviction here. So I would not buy it. I would avoid. And that may change fairly soon. Deckers. All right, so I've been fairly bullish on Deckers. That's done now. If we close out the week below this lower band of support, that's how quick we change our tune. I have been very optimistic about Deckers. I have not said to buy it. I have said to wait for a breakout above 99.88 before purchasing a position, because that's where the sellers are. It has shown relative strength, but now, effective this week, it is performing with the market. It is not outperforming. We are at current below the lower band of support. I would not be a buyer. I would wait to see whether or not we recapture and close above this support level here by the end of business Friday. And if we close above that support level, I would entertain scratching the itch, because what we've done is we've validated that this is a good support level. So I would open up a small position if you're hankering to do so. I've always liked to use that word. I have a lot of Western members. Hankering to put on a trade here, that would be a signal by the market that this is a validated support level. Then, of course, add more on a breakout above 99.88. Until then, watch it, folks. We're seeing a lot of reversal bars out there. Be careful of this market. Costco. I have been somewhat bullish on it. I am changing my tune if we close back down to within this bull flag formation. If we close out the week below this lower band of support, I am no longer bullish on Costco. I wouldn't short it, but I certainly wouldn't entertain buying it. Take note of your indicators. If we were to close out the week at current, we will be trading back down to within the bull flag formation. We have lower highs and lower lows on our RSI and on our stochastics. These are forward-looking indicators. And do you trade on them on an individual basis? Not normally, no. But you certainly want to put them into context with how the shares are trading, the price action, and they are trading in tandem, and they are not looking good. So be careful. Now, the week isn't over yet. A lot can change, and I may be singing a completely different tune by the end of business Friday, but as it stands right now, a caution flag is on the track for not just Costco, not just Deckers, but for the entire market, folks. And members, again, if you haven't watched last night's commentary, please go back and check it out. That's it for this morning, folks. Everybody have a profitable trading day. And as I began with on this commentary, please leave a comment with regard to what you'd like me to touch upon in the morning update, so that way I could provide more value to your morning. Be well, folks.